In today's video analysis, we're going to talk about Palantir Technologies, PLTR, a company that recently witnessed significant price movements and volatility. By looking at the key data points, the options, and the latest company updates, we're going to try to update an overall panoramic view on the potential outlook for Palantir stock. So without further ado, let's delve into the details to gain a better understanding of where the stock might be going on from here. So, before we go on with today's topic, if you like my content and my videos, please consider to like and subscribe, and to take a look at the computer gear links that I have posted in the description. Basically, as long as you make a purchase using my link, regardless of where you are in the world, there is a chance that Amazon will pay me a commission based on the jurisdiction this platform is located in where you live. It doesn't have to be any product that my link introduces you to. But as long as you make a purchase during the session, meaning from the moment that you click the link to 24 hours later, or from when you clean your internet browser history, it would be good. So thank you very much for your continued support and interest, and let's begin with today's video. Palantir experienced a volatile trading day, with the stock fluctuating between $16 and almost $17, and closing usually at around minus 1%. The trading volume has been low compared to the average, which indicates a slowdown in the big money and the retail activity. This trend suggests a possible loss of momentum. The options are showing that a total of $11 million in calls are being purchased, meaning investors, generally speaking, expect Palantir to keep going upward. The bullish sentiment has been accounted for about 74% of the 15.5 million premiums during put and calls. These options indicate a positive outlook for the investors. Palantir's Q2 earnings will be announced on August 7th after hours, and so far the consensus suggests that the revenue will be around $530 million, with earnings per shares projected at around 5 cents. The overall consensus remains positive, with no significant changes reported in recent analyst ratings. Palantir's short score is around 40%, with 7.8% of utilization and 6.61% of the free float being shorted. Shorts returned to around 672,000 shares on the latest trading day, which indicates a modest shift in the sentiment. While the short interest doesn't really point to a potential squeeze, it serves as a useful benchmark. The technical analysis reveals that Palantir stock is trading close to the 50-day moving average. Crossing this level may indicate a shift in the stock's trajectory. It currently trades between the support at $15.35 and a resistance at almost $17, which exhibits signs of potential volatility. Now, there's no significant news or SEC filings so far. Palantir's stock may be influenced by broader market movements leading up to the August 7th earnings announcement. Retail investors have been gradually reducing their positions since July the 17th, which possibly explains the decreased volume. So, Palantir's recent performance has been marked by price volatility, and its trading volume indicates a reduced investor interest. But the options activity suggests a positive sentiment amongst investors, which anticipates further growth in the future. The upcoming Q2 earnings announcement is a crucial event that could significantly impact the stock's direction. While technical analysis points to a potential volatility, Palantir remains a very disruptive company with a promising future. So, with all that being said, let's take a look at the technicals of the stock. The trading volume of Palantir has recently been around 36 million shares versus an average volume of 56. Over the previous 52 weeks period, the price fluctuated between $5.84 and $19. The volume of shares traded tells us how many shares are being bought and sold at any given time in the market, and if there is enough liquidity to support a trading strategy. If the float is thin, it's going to be easy to push the price around, but the exit can be difficult. When we compare the current trend against the average volume, there might be a possibility for trend reversal. The market cap of Palantir is currently at around $35 billion versus the enterprise value of $15 billion. As we compare the price to the historical price fluctuations, the stock is at 18% higher than the 1-month low, 124% higher than the 3-month low, and 180% higher than the 52 weeks low. On the options market, which often gives us a hint on the market sentiment about where the stock price is going to head next, the implied volatility is at 82% versus a historical volatility of 52%. The put-call volume ratio is currently at 0.36. It is normal for most stocks to tend to have a higher put option volume than what they deserve because many institutional investors hedge their long positions by buying put options. The most recent volume options traded has been 186,000 contracts a day, compared to the 30-day average volume of 303,000. In terms of the open interest, the most recent volume of open interest is 2.4 million contracts versus a 30-day average of 2.7 million contracts. In terms of the shareholder structure, institutional shareholders own about 33% of the current float. Usually, it's always great to see some institutional participation when holding a stock long-term. It's also the case here. I would say that Palantir is a relatively volatile stock for a title with such a degree of institutional participation. The current short interest is around 8%, so it's not very significant, and we don't really have to worry about it. Mullen is an American EV manufacturer that has known several different iterations over the years, from Mullen Auto Cars to Coda Automotive, and now Mullen Automotive. On paper, it is one of the companies with the longest continual existence in the EV sector, way before the current giants began to blossom into people's mind. Mullen has tried over the years to gain traction by launching new products and announcing new partnerships in order to attract more capital in the sector that requires oh so much money in order to keep the ship afloat and the operations going. Does this mean that Mullen lacked the capacity to stand on its own feet? Yes. Does it mean that Mullen is so struggling to find its break-even point? Without a doubt. In fact, if anything, there are reasons to believe that Mullen is now facing challenges that are even bigger than the issues from the past. People may have stopped believing in it, and the market has questions about its long-term sustainability. For example, people are sensitive to the CEO's reputation, the nomination of his associates on the board, and that a company has developed no substantial products so far, despite repeated announcements that they have done so. These aspects are not necessarily new. What is different with Mullen this time is that even its announcements seem to attract less and less reaction from the market. And for that, we have to look at the management's past choices along with the global macroeconomic trends to figure out the causality. Mullen has had a habit of disclosing as little information as possible to the financial market, and that sometimes it even chooses to omit significant details like the identity of key partners and clients, as well as the financial health or even the existence of their key suppliers, such as the company manufacturing Mullen's batteries, which was advertised as one of the better ones in the industry, prompted its price to soar by more than 120%. Despite the fundamental and reputational challenges, there are two major elements that justify the continuing interest that people have in Mullen: volatility and short squeeze. Mullen is a small cap that is currently priced around its historical low. From a probability-based perspective, this would mean that the likelihood of the stock to go upward is far higher than to reduce from 20 cents to zero. After all, there isn't much space to go further down, whereas the logical development would be to reach higher levels when the timing is right. This would, of course, assume that Mullen somehow managed to continue its operations, or to at least maintain the going concern. This brings us back to the price volatility argument mentioned previously, whereby small caps have a tendency to experience irrational moves and sudden surges in both price and volume. If a certain number of traders decide to pull in, then from a percentage-wise perspective, this kind of price action can be very, very attractive, because a mere 30 cents increase can mean that the stock would increase by more than 100% from its cost basis. Mullen has obviously been greatly impacted by the ongoing market-wide bearishness, perhaps even more than the rest of the sector due to the lack of any substantial product in play and the absence of clear objectives. I don't mean that a company doesn't share any news announcements, but simply the fact that the public doesn't seem to take them seriously enough to reflect these in sales volume. The volatility seems, therefore, to be random for the most part, with some correlation to be predictable with Nasdaq recoveries and the conversation trends in online discussion. These online discussions are one of the keys to really understand what makes people buy or sell Mullen. Since retail traders are by far the biggest category of Mullen shareholders, these decisions often happen on a whim, with the assumptions that the stock may have massive redemptions in its short seller ranks, whether there seems to be a lot of tractions on a specific topic, and if there seems to be a sudden uptick in the number of conversations surrounding a specific topic about Mullen. These are highly random, or way too unreliable to be a determining factor, or so it seems. But if you think about it, how do most retail traders make their decisions? Is it really the fundamentals, the long-term tendency of an industry? When we're talking about Mullen, a small cap with doubts that they have more hustlers than genuine entrepreneurs? I mean, really, can we really tell whether the announcement of iGo in Europe would create a massive spike in the beginning, but barely any reaction when they actually began distributing? Or perhaps more telling than these two cases is the fact that Mullen share price tumbled by 60% shortly after they announced that they have managed to reduce the company's debt by $13 million, which is huge for a company of that scale, increasing greatly the company's likelihood to survive. But with all those announcements, I haven't really seen a logical reaction, and possibly because the focus is not dictated by logic or any sound business analytics, but by online chat rooms and forums. Therefore, I think that a key factor to take into consideration when trading Mullen is to accept that we are here as short-term speculators on a wobbly stock, hoping that there will be sudden price jumps to justify a participation in the equity. The overall impression regarding Mullen is that it is a company with clear tendency towards speculation, with large potentials of profit in terms of percentage, and mostly relies on irrational factors to boost the share price. Given the lower trading volume and the potential implications, investors should approach their decision to buy more Palantir shares with caution. It is more prudent to currently monitor the stock's movement and to evaluate the market trends before making any investment decisions. If you still have any allocation available and you believe in the long-term run of Palantir's potential, then I would say that it's worth to start buying now. It's essential, though, to keep in mind that the potential impact of lower trading volume on the company's price stability and its future performance. So I would recommend to commit between 3 to 5% of your portfolio when you're buying. It would also be recommended to split the allocation in batches of 20% at a time over 3 to 6 months so that you may purchase more in further retracements.